Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Kathy Donnelly. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with Proprietary equity trader Kathy Donnelly. I know this is Futures Radio Show, so why am I talking with an equity trader? Well, I see so much talk from futures traders about trading IPOs that I wanted to do a show with someone who focuses on trading them. Kathy and I had a great discussion about trading IPOs. She shares with us her trading process and how she personalized it, setting up trade alerts, trading Uber, her book, The Lifecycle Trade, and last but not least, we discuss the importance of traders working on their physical and mental health, and she shares her recent experience doing an Ironman. So without further ado, let me take you right to the interview with Kathy. Kathy, you are just coming back from Australia doing an Ironman. Talk to us about that.
Yes, it's only been just over a week. I've been back in the USA, and it was an amazing experience. I went to Cairns, Australia, and if people are out there thinking about going over there, I'd highly recommend it. The people are super nice. It's super beautiful, and it's the port to get to the Great Barrier Reef. So that was another reason we selected that location. I love swimming, and I love biking, and I kind of like running. But I've been doing Ironmans on and off. Well, not on and off. What am I saying? This was my second Ironman, and I did my first one last year. And I think I might have a little bit of a bug. But it was, if you love fitness and you really want to challenge yourself, I highly recommend doing an Ironman and actually going somewhere to do it. You know, I did Ironman Boulder last year, which is right in my backyard, basically. And I decided I didn't want to do that one again, but I wanted to challenge myself and my body because I was really humbled to see what I could be capable of. And so just doing it another one again, it's just amazing what your body can do for you and how much younger I actually feel. So amazing experience. Highly recommend it.
That's awesome. And the reason I kicked off today's show talking about that is because exercise is a huge part of your life. Everybody knows on this show and in my Trading Futures show, I focus a lot on physical and mental health now because I think it helps us in business. Obviously, I think it helps us in life, but I think it really helps us as traders. And you actually begin each day exercising. How important is physical health in your life helping you as a trader?
Oh, it's so important. I mean, I feel like if I don't exercise, then I can't think clearly. You know, even just a walk with my dog in the morning. Before I was training for Ironmans, it would be just a walk in the morning for an hour with my dog just to clear my head. So whether it's a spinning class, just a walk, just getting out and, you know, being outdoors with the trees and the sun. I mean, it's just, I can't even describe it. I do some of my best thinking actually when I'm exercising or running. The problem is I don't always remember, but eventually it comes back to me. It's just those endorphins that you get from being outside and helps you to be productive for your day, I think. And the other thing I'll add too that I like to do is meditate. And I've only been doing that for maybe 3 or 4 years now. But meditation is also a big part of my life, in addition to the exercise, because it clears my mind. It helps my brain rest. I mean, that's what meditation does. I don't know how familiar you are, your viewers, but it actually gives your brain time to rest if you're able to, do it for long enough time and get that memory in there. So that's another thing I would definitely recommend to your viewers, in addition to, getting out there, walking, anything really, just to get your heart and body moving.
I completely agree with you. I mean, being a trader is a lifestyle, and not the lifestyle that maybe you'll see from some people on Instagram. No, it's more of real life, right? It's about being physically fit, mentally fit, and they definitely work together. And I'm very familiar with meditation. I've been meditating for close to 5 years, and really, I don't meditate for a long period of time. I meditate for a short period of time. Even before this call, I took a 30-second to 1-minute meditation just with breath. And that just always helps clear my head and get myself prepared for anything I'm going to do. So I take mini meditations throughout the day. I don't know how you go about it, but I think it doesn't need to be this long sitting there for 10, 15, 30 minutes of meditation.
No, I agree. It doesn't have to. It can be, whatever works for you. And any amount of time, just pause and take a breath, take a break and breathe is exactly what you want. And, as traders, we're dealing with these crazy markets, and their stocks are up or down and this and that, and you don't know what's going on. And this just makes it like, oh, okay, whatever. I mean, you still care, but that's going to happen, and you don't have hopefully, the meditation and all the other things that you're doing just reduces that anxiety. And you just become a better trader and a better person.
Yeah, it helps me with focus. And what I want to focus on next actually is your process for trading. You're a technically based proprietary trader. So talk to us about the markets you're trading and how you go about your technical strategy.
I am a long-term rules-based trader is what I would say. So I buy stocks using rules, technical entry points out of bases, looking for early entries that hopefully I will be able to hold for a year and a half or more. So kind of long ball, I guess some people also like to call it. I originally read Bill O'Neill's book, How to Make Money in Stocks, and he was all about rules-based, getting the emotions out of it. And that really appealed to me because my degree is actually in engineering, and I always liked math and science, and I like that 2 + 2 is equal to 4. And so with looking at charts, you see the base, here's the buy point. I mean, that's the buy point if this is the base. And so that really appealed to me. And so that's how I trade. And I have rules that have been set for many years now. Every now and then I may tweak here and there, but they've been working for me for a long time. And that's how I do it. I try to work efficiently and not try to overthink it, and just or try not to think, because I have my rules. So then it's pretty much hopefully automatic at that point.
Yeah, actually, you sent me a tweet the other day saying that you try not to think. It was pretty funny.
Yes, I did.
I don't remember what exactly I had written that you were commenting on that. What were we talking about at the time? Oh, I was talking about people having calling out these big moves. But it's not about calling a big move. It's about knowing where you're wrong and executing the journey to where you think a market could go. And so let's stay on that for a second. I think that's something to discuss further. Talk to us about a trade example. You said you're a little bit of a longer term trader, but how does a trade set up for you? Are you scaling in all at once? Talk to us about your exits, stops.
Yeah, absolutely. So I know we're going to talk about this later, but I recently published a book with some friends at Lifecycle Trade, and we really tried to study a stock's life cycle from when it IPO'd to when it's a mature stock years later. And so what I like to do is probably wait, for an IPO, maybe 6 months to a year later, because usually there's a lot of volatility in those first few years or first few months, really. And then eventually, hopefully, it settles down. It starts to get some earnings. And then I'm looking for that first base that's created after all of that. Somewhere around 40 weeks or longer is what I've observed is a good time, at least for what I've seen with my trading. And I'll look for a solid base right around that time frame. And as long as, everything else is still going with it, the earnings and sales, or definitely sales, sometimes the earnings still might be spotty. And then that's where I'm looking to get in, where I see a tight consolidation flat base or maybe cup with handle. And I'm sure your viewers are very familiar with these patterns. And then I'm buying there. And those are my initial positions. I usually do, Bill O'Neill taught a three pyramiding in with 3 different trades. And I just do 2. I have my position size and I do half of it. And then I do the rest like 2.5% later if it continues to work. And then if it does really well and I'm able to get 30 to 40% more out of that trade and it builds another base, then I'm buying again. And then after that point, then I'm just along for the ride as long as it maintains the 40-week line. I like the 40-week line. I mentioned it, I think, just a few minutes ago. And then if it continues to hold that, that's my long-term trade until it just decides it doesn't want to hold that anymore.
It sounds to me that Bill O'Neill was a big influence on your style of trading, but how did you personalize what you learned from Bill to make it more your strategy?
Yeah, that's a great question. Well, I used to go to the seminars that Bill used to do in California. He used to teach the level 4, he called them master summits. And, they'd show all these great stocks, all these super growth stocks, and had all these great runs. And I'm like, wow, well, how did they really do that? And every time I looked at them, I could see at the very top where they cut off the chart in the workbook was when it broke the 40-week line. And over and over and over, that's what I saw. So I just said to myself, okay, well, I just need to get into it early. And then I'll just hold on to it till it breaks that 40-week line. So it was just kind of like I looked at enough charts, I went to enough seminars, and I said, that's the line I need to pay attention to if I want to have big gains.
Do you use any automation or automated alerts in your trading?
I really don't. No, I shouldn't say that. I don't set automatic buys and sells. So I don't have any trade market orders in or limit orders or anything like that. I use the product MarketSmith, and I set alerts at different price of the stocks that I want to get into. I'll set, price alerts at those points. And then I have, my iPhone, and I go about my day. I'm exercising, I'm having lunch with friends, and then I get an alert. I say, oh, it's hitting my alert. Pause, please. Let me check my stock really quick. Let me see what it's doing. And then I'll decide at that point and execute the trade live. And that's how I'll do my buys and sells.
What I'm gathering is that you have a systematic approach, but you do use some discretion on execution. Or am I wrong?
Yes. No, that's correct. When I used to work in the corporate world, and I had to be in meetings and I was meeting with other people and I couldn't, I was just really trading on the side. I would set stop orders because if this stock went, I didn't want to miss it. But now that I have the luxury that, it's just my life and I don't have to go to the corporate office anymore. It's just my office, which can be anywhere because I have my phone. Then yeah, I can just, whenever I get the alert and I can know if I'm expecting it, right? And then it happens and then I look at it and then I make my decision and execute. Thank God for the iPhone. Sorry. Thank God for the iPhone. It's just changed. It's just changed all of our lives, So
yeah, convenience. You don't have to be in front of your screens all day. Do you use any confirmations after you get an alert? Let's just say, for example, you get an alert and this is a trade that setup that you were looking at. and I mentioned how I thought you were systematic with using some discretion in your execution. Are you then going to look at maybe other markets or using an additional indicator, something to give you an additional reason to then enter the market or maybe not to enter the market?
No, I would say I don't look at the market usually. What I will can take into consideration is, I guess, what they call amateur hour. The first hour that the market's open, all the alerts go off. It feels like, I mean, even just, things that I'm watching, everything is going off, and then who knows what's really going to happen with the market that day in the first hour. So all my alerts go off, I reset them and I wait for them to go off again, like in another hour or 30 minutes later. Or maybe I'll look at that if it goes off and I'm still not convinced. Maybe I will actually look at a 15-minute or a 30-minute chart and just kind of assess, well, what has it really been doing? Is it still just being toyed with? Or is this like real confirmation? I will do that sometimes, especially if the alerts are happening in the first hour. If they're later in the day, then, I take it more of a, okay, this is what it's going to be for the day kind of thing. So I would say maybe that's a secondary confirmation that I'll do, but it's only still within that stock.
Give me an idea of what alerts that you have programmed.
Pretty much, I try to buy stocks at an early buy point within a base. So maybe there's let's just say a flat base, which is usually a 15 to 20% correction in a stock over 5 weeks or more. And, the buy point is going to be the high of that consolidation for those weeks. So I'll set an alert there for sure. But then within that consolidation, I'll try to set some type of early alert, like maybe a previous high within there, or maybe a downward trend line, and then I'll set an alert there as well. And hopefully that'll be my first buy, that kind of early buy. And then depending how far apart in percent that alert is from the actual previous high of that entire consolidation, that'll either be my second or maybe a little bit earlier, because I do try to keep them within 2.5% of each other.
Do you have different levels of setups, something that is, let's just say, a larger position versus a smaller position? How do you differentiate in how big you're going to trade on each setup?
All my new positions get the same amount of money allotted to them, no matter the price. And unless it's an IPO, if I'm buying an IPO that's like really new, out of an IPO base, so we're saying like within the first 5 or 6 weeks of a stock, that I will do less than half of a position just because of the volatility and the nature of IPOs. I don't invest as much in those because I know it's going to be a shorter, more volatile trade. Otherwise, all my other stocks get the same amount of treatment, because if I'm picking that stock, then I'm saying that I think it's going to work. I'm not just, throwing trades out there just to see what works.
You talk a lot about IPOs. How should traders approach trading IPOs?
I think traders should approach IPOs with caution. One of the biggest things that I have noticed, and even more so now because we've done all this research, is that there are a lot of people out there saying and recommending to buy the stock on the first day. And to me, that's like the number one rule not to do. You don't want to buy the stock on the first day. And you really don't want to buy it on the second day or the third day either. If you're talking about Beyond Meat, okay, maybe. If you were a fast trader, yeah, that was one. Who knew? But a lot of the stocks, a lot of the IPOs aren't going to do that. So I would really like to see traders approach IPOs with caution. Wait for an IPO base, understand that it's going to be more volatile, understand that anything that happens in that first month or two is probably going to be volatile, and that you're going to have to be using some fast rules to get you in and out. And then maybe, like I said earlier, what I like to do is wait 6 months or more, and then, still keep your eye out on these liquid, I'll say liquid, $20 million a day or more, and then keep those at the top of your watch list, because those first runs that happen from that stage hopefully are going to be the most lucrative and rewarding trades that you can make.
There's so many different types of stocks out there. Is the approach standard to all of them? There's so many different companies out there. Is the approach standard to all of them?
Yeah, no, I hear what you're saying, Anthony. I would say the criteria to kind of figure out which IPOs would be the liquidity. What we found in our research is that only 28% on average of all the IPOs are even liquid enough, or even stocks in general are liquid enough to trade. And we use 20 million because that's where we really saw where the difference was, because, we want to buy the stocks the institutional investors are buying so that we can just, go along with the ride with them. And then the other criteria I would add is strong revenue. So you want, millions and millions of dollars in sales, hopefully, and increasing. A lot of the IPOs may not have earnings right away. And of course, we want earnings too. But if they have the strong revenue, that seems to be working, or at least that's what I've seen has been working, at least in these last couple of years. And that's one of the things that we write about. So as far as different industries, obviously I want an industry, I want it to be a stock that's doing something that's changing how we live, work, and play, right? Like the iPhones, like, I don't know, Amazon. Back in the day, right? Amazon's a big company now, but it's still going up. So, I'm not saying anything bad against Amazon, except that it's just an older stock. But, something that's really changing how we live, work, and play, $20 million a day or more, and strong revenue is what I would say to really try and pick out some of the better IPOs.
You gave us some solid criteria for things to look at when trading them. But let's go the opposite way now. What should traders not do when looking to trade IPOs?
Well, and I think I kind of mentioned this earlier, but I'll say it again just to make sure. Don't listen to the media. Don't listen to the news and the opinions, right? Look at the stock with your own eyes and look at it with the rules and experience that you have, and make your own decisions, because oh gosh, it really makes me sad where I see they say, okay, buy it now, or even stocks that are going down that have already IPO'd for a while and they're recommending to even buy it lower, and you don't even know if that's the bottom yet. I really, oh gosh. So, but people are going to listen to the news. So just don't buy it on day one. Wait for a solid IPO base and hopefully a breakout from that base if you really want to get into an IPO early. But don't buy it right away. Don't be in a hurry. Get the fanfare out of the way. And then when it's ready and it's not as much fanfare, that's when you want to get it.
What are some of the myths around IPOs you uncovered during your research?
Yeah, well, I think those are some of the myths, is that IPOs are great buys and that most of them are successful. But what we found was actually 91% of the stocks that we studied actually undercut their day one low price. So, the day that it starts trading, there's, a high of that day and there's a low of that day. And 90% of the stocks will undercut that low. And most of them will probably even do it in the first 3 weeks. Over half of them will do it in the first 3 weeks. So that tells us right away that the most of them aren't going to work. They're going to have a pop, but they're going to flop, or they're not just going to flop. And maybe they'll come back, years later, like Facebook did. Facebook's the epitome of what we call the pump and dump, where it just flopped right away among lots of fanfare, and then it came back later. So with those statistics, I think we've shown, and I used to be one of those people. Let me clarify. I used to be one of those people that wanted to buy IPOs right away because it was going to be the next Google, and I was going to be done trading after I bought the next Google. And so I quickly found out that no, that's not the case. It actually pays to be really picky And for me, that means waiting and then looking for that run later, like what Facebook really did is another good example.
The talk of my friends when it comes to IPOs over the past year is Uber.
Yes.
Talk to everybody out there about what an approach should be to trading Uber. Are you trading Uber?
I'm not currently trading Uber, but I am watching it because it has made a nice little IPO base. So kind of what I was talking about. It's only about 20% deep, and it's only like 3 weeks long. And it tried to break out a little bit, I guess, while I was on vacation, actually. And it actually passed one of my early buy points while I was in Australia doing the Ironman. And I was tempted to buy it, but I made a rule that I wasn't going to put on any new trades while I was gone. It was just about holding what I had if I could and only making sell trades if I had to. It's got strong revenue. It's in the billions. It doesn't really have any earnings, but the chart looks really nice. I like the chart. It's not currently in a buy zone, meaning it's not at that previous high of those first 3 weeks. But yeah, so I mean, from a technical perspective, it looks like it might be ready to go, and so I'm watching it for those reasons. I like that it has strong revenue. I like that it has a little bit more diversification in what they're trying to do versus Lyft. But we'll wait and see. And I know if it does go, it'll probably be a short-term trade, and I'm just going to keep my eye on it for the next year, 2 years, and we'll just keep seeing what it does, and see if it gets some earnings. If it gets some earnings, I think that'll definitely at some point get it going for sure if it doesn't get it going now.
What would be the trigger for you to get in Uber?
I think what it would take to get me into Uber is for them to have a quarter of earnings and it gaps up, and then it creates like a flag or a short consolidation after that gap up. And then I would want to get into it because then it has earnings. It had the strong demand with the earnings gap up. And then that tells me, okay, this thing might be ready and I'm going to give it a shot.
How do you determine stops?
So when I buy a stock, my stop loss rule is 8% from my buy point. So that's the initial entry. Sometimes I'll sell it sooner, only like if it's like really obvious or the market's going down and I just don't want to wait it out. But usually I'll give it, I would say 90% of the time I'm giving it 7 to 8% stop loss of anything that I buy. After I have a gain of 50, 60, 70% or more, then I'm really not selling it until it's like a total breakdown, like huge gap down underneath the 10-week line on a weekly chart or that 40-week line. And I would say most of the time it's probably going to be that 40-week line, but it also will depend on what is the market doing? Like, are we in a correction? Like just recently, we were in that correction. A lot of stocks came to their 40-week line and then they went back up. So depending on where I was on the stock and how much I had in my gain, I would hold on to it. But in a normal market, I'll say normal, what is normal, but an uptrending market, and there's a big gap down on earnings and it just crashes below the 10-week and maybe I don't have as much gain in that one than another one, then, I'm just going to cut it. I usually think about it in terms of, I ask myself, do I want to wait this out? And if I don't want to wait it out, then I just cut it. So there's a little bit of subjectivity there because if it breaks the 10-week line, but if it breaks the 40-week line, then it's a little bit more firm unless it's like a full market correction. Because I know most stocks are going to just come back out of the correction, especially if it's a strong stock, then I'll hold on to it and wait.
Let's talk a little bit about your book, The Lifecycle Trade. I haven't read it yet, but I'm excited to read it. What will I be learning about when I read your book?
Well, you're going to learn about a stock's life cycle. And what we did is that we were able to identify different phases and patterns that these stocks go through from their initial public offering to a mature stock. And, being that I'm a technical stock trader, this has just even increased my knowledge of technical analysis even further, because I'm always looking at charts, right? And I want things to jump out at me. And so now, after doing this research and writing the book, what's jumping out at me are these phases. Like, I know, okay, this is the Ipo Advanced Phase. So it goes up a little bit, but it's not going to last long. And then there's this stage of the stock where it doesn't really do much. I'm like, okay, this is the institutional due diligence phase. Nothing's really going to be happening yet, but I'm going to be looking for that next base that comes up, hopefully above that 40-week line. And then if that works, then I know, okay, that's the institutional advanced phase. This is going to be my best low risk trade where I'll be able to make the most money. And then within those phases are different patterns. And, we have different ones like the pump and dump I mentioned earlier with Facebook. Stocks that just go down and then they just go down and hopefully they bottom at some point like Facebook did. And that was during that due diligence phase. And then it gapped up on earnings, created a short little consolidation, and then, kept going from there into that institutional advanced phase. So that was like the pump and dump. And then like we have late bloomers, which is one that goes up for a little bit. Actually, Twilio, I'll say, is probably a good example of that, a current stock right now that still appears to be going up, knock on wood. I'll disclose that I have that position in Twilio. It had initial run after its IPO. I didn't own it back then, but then it didn't work. It didn't do anything for a while, and then it created that little base I told you guys about near the 40-week line, and then it's been luckily going up from there. So far, so good on that one. So you will learn about all these different phases and patterns. And then hopefully, and then when you go about your trading, you'll be able to see this in other charts that you're looking at. And it'll, maybe something will go off and be like, hey, yeah, that's what they were talking about. And maybe I should, give this one a different kind of a view, help you make a better trade, hopefully.
Good stuff. I'm looking forward to it. But up next, we have some rapid fire questions if you're ready for those.
Uh-oh. Rapid fire. So short answers. My answers have probably been pretty long.
Yeah, a little shorter answers for these questions. All right, everybody. Next up, in our rapid fire segment, which is sponsored by Trading Technologies, access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Kathy, first question for you. What trader has influenced your life the most and why?
Well, I guess I'll have to say William O'Neill. He's the guy. He was, rule-based technical trader, and with my background, that really fit with my personality and the way my brain works. So I'm going to give it to him.
What was one of the hardest things for you to overcome in trading?
Definitely the losses. I say I cut my losses now at 8%, but back then, naive, foolish, all those emotions. I let losses get away with me when I first started trading, and I made excuses and I didn't follow rules, even though I was supposed to be following rules. So that was really, it was a journey realizing that, okay, I really do have to take losses. I can't just make up reasons why this is okay. So that was the hardest thing I had to really rein in.
How has your trading process evolved over the years?
I think the thing that's happened the most with my trading is that I've become more confident. And then I'm always looking of ways to be more efficient so that I am not wasting time. I don't want to waste time on information that's not valuable or doing research that's not valuable. So I would say I do a better job of being more efficient. And I think just experience has just helped me to have more confidence in my own ideas and what I see and not what others are seeing or doing.
What is one attribute that you believe every trader should have?
Absolutely discipline. Discipline. No matter if the market is going up, down, sideways, stick to your routine so that you're always in sync with the market. I like it. I like to know what all stocks are doing. They're being talked about so that if I have a meetup member that asks me a question, like, oh yeah, I'm familiar with that. I want to be familiar with everything that's going on. And that requires looking at everything every day. and making it efficient, like I said earlier. So definitely discipline and sticking to your plan.
Favorite book about trading?
Oh, one of my favorite books is actually How I Made $2 Million in the Stock Market by Nicholas Darvis. And the reason why I like that book is because I love that he was a dancer by day and a trader by night. So kind of like we've been talking, exercise by day, trader in the evening and at night. And that was the lifestyle that I think I wanted, which is why I liked it so much. And it really didn't hit me why I like that book so much until now, looking back. So that's one of my favorite books. It's a great read. Highly recommend it.
What's the best piece of advice that you've received about trading?
The best piece of advice I received was actually what I've been talking about. Don't listen to the media or what other people are saying or doing. So easy to get caught up on someone else's idea. Oh, you should buy this stock, or I'm watching this stock. If it doesn't jump out at you and meet your criteria, then you shouldn't buy it. Doesn't matter if he's buying it. There's lots of stocks out there. You're not going to get them all, but you're going to get the ones, enough of them that will work, because you can't get them all. And there's enough of them out there for all of us to be trading different ones. We'll be in some of the same ones, but there's plenty out there.
If you could go back in time and give the younger you a piece of advice, what would it be?
Oh my gosh. I would tell myself to read a book on trading. I did not read a book on trading. And so, yeah, I really didn't. I went out, it was probably, I think I was in college, opened a brokerage account at a discount stockbroker, when they used to have those with, there was like $50 a trade. And they said, oh, you should buy this. Okay. Oh, it's good to buy stocks after they split. Okay. I didn't read any books until probably 4 or 5 years later. So I would tell myself to read a book first, find a system that appeals to your personality, the way your brain works, and then start trading.
If you had an elevator pitch me your edge in trading, what would you say?
I think what gives me the edge is focusing on those stocks that are early in their life cycle and capitalizing on those runs that they have.
Last question for today. Favorite thing to do when you're not trading?
Exercise. I love exercise. I love hiking. I love hiking with my dog and my family, my husband too, of course. Just being outdoors. Just enjoying this beautiful world that we have.
This was great, Kathy. Where can people find you on Twitter, and give us a website to check out?
Yes, absolutely. You can follow me on Twitter at KGD_investor. And our website is www.thelifecycletrade.com.
Kathy, this was awesome. Thank you so much for coming on Futures Radio Show today.
Thank you, Anthony. I really appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.